about understanding insurance when it comes to buying property subject to its existing mortgage. Let's dive in and get started. Before I go on to this, let me tell you guys that I'm not an insurance specialist, nor am I a lawyer. Hey gang, this is Mike with my Real Estate Dojo, and today's lesson is about my rental properties, when I buy properties subject to, and what has worked for me, okay? Now, when I buy a property subject to, there's been two ways that I've done it, okay? In the beginning phase, okay, I was so scared that I thought the bank was gonna call the note up and, and I was so scared. So what I would do is I would buy additional policy for the property I just bought, all right? And so the way it would work is, let's say I just bought a property X from a motivated seller. The seller had an escrow which had an insurance policy from it. What I would go do is I would buy additional policy outside of escrow that covered this property. So in essence, I was paying double insurance. Now, the reason I was paying double insurance is twofold. Fold number one was that I understood that underlying insurance policy that was in the escrow would not cover me or the property or the previous owner in case there was a loss. And the reason that insurance company would bullshit out not covering any of us is they would make a claim that the previous owner doesn't have an interest in the property, and it's true because the previous owner doesn't own the property anymore. Therefore, they're not going to cover the property because they've already sold their interest in this property, which I think is pretty fair because they don't own the property. The second reason I escrow and buy double insurance is because I was scared. I was scared that the bank was going to realize that, hey, I just bought Mr. X's house, and since I changed the insurance policy, they're going to get notified. Because here's the secret here. The banks don't have somebody at the county clerk's office looking at the records and saying, oh, Bobby just bought a property, Mike just bought a property. No, the way they get notified, from my understanding, is that once you change the insurance policy, okay, now it's going to reflect your name instead of the old seller's name. That's how the lenders get notified or get tipped off that the deed has been conveyed or the title has been transferred to some other owner. Okay, therefore, I bought double policy because of two reasons. One is that I had fear, and two, I understood that underlying insurance policy that was in escrow from the previous seller is not going to protect my interest in this property. Okay, so that's one way to do it. Now, the pros of buying double insurance is that you're shielding yourself from the lender finding out that the interest of the property has been conveyed to you, okay? That's one of the big benefits of it, which I like, and that's why I used it. Now, the cons of it is you're paying two fucking insurances, and that gets expensive. So let's say if the insurance is $150 a month, $200, now you gotta pay $400 a month, which eats up into your cash flow, okay? And after a while, for me doing it, after a couple of years, I really said, man, this just sucks. I hate paying this double insurance, and I'm gonna switch it to option number two, which I'm gonna tell you just in a second. Now, we talked about the pros. The pros is if you buy double insurance, you're gonna cover yourself and decrease your chances from the lender finding out that you actually bought this property, because every property that you buy has a do on sell clause in the deed of trust, so which says that if the seller transfers his interest to some other party, the lender has a right to foreclose on the property and accelerate the notes. Okay, and therefore, if you want to protect yourself to the most extreme, then I went with option number one because I did want to protect myself. Is that, and I was scared that I wouldn't buy double insurance. Now, the other way to do it is that you actually cancel the seller's old insurance from escrow. Now let's go back to the same situation. You bought a home from Mr. Y, and Mr. Y had an escrow set up, and now after closing, or right before closing even happens, I have my insurance company, I'll buy a new policy for this property, say, hey, this is the date that needs to go into effect, which is right before closing. And then what I do is I cancel the previous seller's escrow insurance and have my insurance agent send them the new declaration of insurance, which includes me as the owner of the property now, okay, instead of the old seller. And yes, the bank actually gets notified, and it does increase my chances a little bit more, but I haven't had any bank have a loan call on me. Is that possible? It is possible, but I think honestly I'm gonna have a better chance of getting more multiple car wrecks than a bank calling a loan on me. So for me, the risk is definitely worth it. And the option number 2, which is I cancel the underlying escrow insurance and I buy my own policy and put it in place. Now the pros of that is that I only have to pay one insurance policy, and the cons of that is that I increase my chances just a little bit more to let the bank know that actually the transfer of interest has happened between me and the previous owner, guys. Now, for me, the way I have set it all up, I had a couple of losses. They were not 100% losses, and the insurance company had never had a problem paying me for the losses that I had. Okay, guys. Now, I'm not a big fan of insurance, and I think they're a scam. But in America, you're gonna need it. Even though that my claims were paid, it just took a hell of a long time to pay for it. So I guess what I'm saying is, if you're a buy and hold guy, you cannot just have no money. You gotta have some money stashed up to be a buy and hold guy, because even though there's an insurance out there, let me give you an example. I had a roof that got damaged. I ended up paying for it. It cost me like $5,000. It's a pretty big house. And 8 months later, I finally received part of my money from the insurance, and now I'm still debating with the insurance for them to give me my check. And their story is, hey, I sent you a check, you never got here. I sent you another check, you never got here. I sent you another check. In a nutshell, just BSing me and giving me the runarounds, guys. And so that's what the insurance companies are. So what I'm trying to tell you guys is, even though this episode is about insurance, if you're a buy and hold guy, you better be able to self-insure yourself, because if you're just going to rely on these fucking insurance companies, then you're going to be redlining it a whole lot, and it's not a good feeling. Okay, so you better have your cheese stacked up that if a roof goes out, if something goes out, you're able to help your tenants before insurance actually kicks in. Some insurance companies are really good, some of them are just shitty as fuck. So, understand that. Just because you have insurance doesn't mean they're gonna be happy to write you a check right away. You may end up paying for it, and you have to go beg them to give you your fucking money, which you're already paying them on the fucking policy. So do think about that. But coming back to the subject, there's 2 ways to structure a subject to insurance that I do. And let's recap. You could, number 1, buy the home. It has escrow. In escrow, the old seller has insurance in place. You leave that insurance at the escrow in place. You don't fuck with it. You just keep paying on it. Then you would have to go and get your own insurance from your own insurance company to cover the same house. So technically, that house is going to be double insured. And some people are going to tell you, hey, this is wrong or fraud. Okay, so I bought additional insurance for it to cover in case I do have a loss. Okay, the pros and cons, we discussed that. The option number 2 is that you find a motivated seller, same story. He has escrow, there's insurance in place. Now, what you're going to do in option number 2 is what I do in option number 2 is I cancel the insurance at the escrow, just an escrow, and what I do is I get a new policy, and then I have that agent submit it to the lender and have that as the official insurance policy. Now, we talked about the benefits and the cons of both of them. Now, this is why I love subject to properties, because even though that I didn't go out there and get a loan under my name, or I didn't have to use my money, I'm still protected through, taxes, through being able to buy insurance. So in reality, it's like any other transaction. The great thing is it's not my social security and it's not my money that I had to put up. It's other people's money, and that's why I love this technique, and that's why I became a black belt in it, because as an immigrant to America, as a refugee to America, I really saw the opportunity to, whatever money I had, to grow it without even signing my own social security and put it up online, without me paying all these junk fees at the title company, because the seller that I buy the property from, they've already paid all that fucking junk fees for closing costs. Now, if you don't know what the closing costs are, please watch my video about closing cost, so you understand what is the closing cost in every transaction as a real estate investor. Hey guys, something I forgot to mention to you guys is that if you want to know how I exactly do it with the option 2, which is canceling the underlying insurance, what to put on the paperwork which is submitted to escrow, because you have to actually put the old seller's information on there too, so it doesn't make the banks really pissed off, because if you do it incorrectly, they're going to get more agitated and then you have a higher chance of them calling and noting. So if you want to know exactly the way I've done it on multiple of my rental properties without the bank getting upset, then please let me know in a comment below. I'll upload those files for you for just a couple of pennies, guys. Okay? If you really feel like I'm giving you value, please support me so I can get motivated. It's not because of the money, but it just pumps me up that you guys really like my material, so I can do more for you guys. This is Michael with my Real Estate Dojo. Robert, have a great day.